last one.
Good morning. Welcome to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. And kicking off 2018 with me is Chris Dearborn. He's the Managing Director on Nasdaq's Markets Intelligence Desk. Thank you, as always, for joining me at MarketSite. The big question that I'm getting, and I'm sure you're getting it too, will we see a repeat in 2018? Because I don't know, first 4 trading days of the year, we keep hitting new highs. Dow over 25,000, the comp over 7.
Jill, Happy New Year. Thanks for having me. Well, yeah, why not? Right? You've got 4 days where the markets are just on a tear. You got new money flowing into the markets coming out of the gate. You saw the markets sell off a little bit coming into the end of 2017. You saw the VIX slightly rise above 11. At one point, everyone's like, oh, volatility's back in the market. Slam that idea. We're done with that. The VIX is trading at 9. The markets are on all-time highs. The Dow, through the presidential election in 2016 now, saw 1,000-point rises,
Right.
Each monumental unto themselves. The Nasdaq composite is on a tear. So what's taking us there, right? Tech is still outperforming. The consumer is alive and well. You're seeing stocks boosting. You're seeing money being put to work. There's plenty of money on the sidelines. People took profits at the end of 2017 because you had a tax plan that go into place. People wanted to lock in some profits, write off some losers, and move in. And now all of a sudden, you got pension money being put back to work, as they do at the beginning of every month. If you have all 4 days, including today, rise above 7,000, it's going to set a nice precedent for the month of January, and we're off to the races.
Yeah.
You can make a bull case here that we could go, another 20-30% higher.
Right. Well, we had an 8 handle on the VIX on Wednesday. I don't think anyone expected that.
Right.
But what's so interesting is in 2017, this was a rally that everybody hated, or the rally they've hated for the past 9 years. But that's a different conversation. Now, the first 4 days of the new year, everybody loves this market.
Right.
It seems to be like a sentiment shift overnight, and I think that dynamic is interesting.
It really has, but you're looking at all the analysts going back to work on the sell side, and they're putting out their models, they're raising targets for a number of companies. What's not participating right now is the small cap names. If you look at the Russell 2000, which is an index of the lower 3,000 of the lower 3,000 companies by market cap here in the U.S., that's not as performing as well as the larger cap names. So where's that money being put to work? To the larger cap names. So the indexes that Main Street follows, the Dow Jones, the S&P 500, the Nasdaq 100, what you're seeing there is that money's being put to work in those names that are liquid, have a higher price multiple, and a lot of these analysts saying, you know what, I can make a bullish case for all of these stocks and these indexes to move higher based on valuation because they're not expensive yet.
I would also argue that perhaps we won't see a sell-off in 2018, but sector rotation is a strong possibility, and of all sectors, biotech, for example, is undervalued. When have you heard that?
That's absolutely right. So you're kind of, everything's kind of on its head right now because nobody really knows where to look. You've got the S&P in the third quarter of this year is going to rejigger their 11 indexes. So the telco indexes is really only a handful of companies, 3 to be specific, is going to get a refigure. We don't know what that's going to be yet, but you could have companies like Netflix or Facebook put into that bucket, and that could be a whole game changer for the sector. Those companies will still be in the S&P 500 as a whole, but when you talk about sectors, that could change things. But let's talk about what happened for last year. Energy underperformed, was a negative return. Telco, as it stands, was a negative performer too because you had M&A in the space and some of it didn't really take place. So I never really saw that. What you saw was consumer discretionary outperformed, just kicked it out, knocked it out of the park. But you had a lot of names in there that did not perform. Again, the larger companies, the Amazons of the world, pushing higher. You had discount stores pushing higher, all-time highs. Select retailers, did very, very well. A company like Zumiez, made an all-time high, a 52-week high yesterday, after being down the doldrums all year. So what you're seeing is people getting more selective in the small and mid-cap names and putting money to work in the large cap names as a whole. So you're throwing all the money against the wall against the large cap names, and you're picking those small and mid-cap names, and that's where the money's going to be. So energy is still underperforming. You figured with this snowstorm here, in the whole Northeast, you would see natty gas.
It's actually, every time it gets a little bit of a pop, it's selling off, which, I don't know, we've been, under freezing for the past 2 weeks?
Yeah, it's brutally cold, as you can tell by my sweater. I don't know how you're doing without.
I know. Oh, we should see me on the way in with leggings and boots and hats and scarves, but we have to look pretty here now.
No, at least you do. I get to go buy what I have. So what you're looking at really is people selling certain rallies but putting money to work in the other sectors. Real estate, where has that been? It's okay as a new sector, but nothing great. Discretionary has always been good, but staples has been, one that's coming along as well. You got some great names in there, just think of it like, Pepsi, which just recently switched over here to Nasdaq, is one of the better performers for the year as well. Go along with Mondelez and Kraft Heinz, stable companies that have good price performance that give a good dividend that people like on that rate of return. So where are we going to go for next year, right? Here we are, 2018, right? Everything that people thought was going to happen in 17 didn't happen. You had a presidential election, Republicans took place, we went after healthcare, nothing changed. Everything, nothing really worked for them. And you've listened to the pundits on TV, it's all about gossip and everything else. But what's really happened here is that the market continues to move higher on this watch, and for the president before as well. So why? No matter what they say, they don't know. And what the reason is, because you have money going to work. There are less stocks traded in the U.S. than there ever were before.
Yes.
Right? Which is
the peak was in 1996. Yep.
Yep. Right. So what do you have to? You have to put money to work because there's more money in pension funds, 401ks to put money to work. Mutual funds have to buy the underlying. Indexes have become the norm. Therefore, the ETFs have to outperform in order to get that rate of return. And if you're a hedge fund, you have to beat that index. So where are you going to put that money to work?
U.S. equities.
There you go. The only place you can go. You look at the flattening yield curve on the Treasury. The 2 and the 10 are coming very tight right there. The bond pundits are going to be sitting there and saying, what are we going to do here? And the bonds always dictate where the equities are going to go, but that curve has kind of really changed a lot lately. You're at 2.2%, you're at 2.5 on the yield on the 10. Is that really enough? And you're looking at 3 interest rate hikes this year. You're definitely going to have one in March. It's at an 85% rate right now when the new Fed governor takes place comes in, and that 3 rate hike is already kind of priced into the market.
Right. I would also argue, too, that the Fed has been very clear about telegraphing the path that they're going to take. And to be quite honest with you, the market, the economy is doing well. As you said before, consumer trends are doing well, which is the biggest chunk of GDP. So, what's 25 bips in the market?
Nothing.
It almost seems to be as if this macro, even geopolitical waves within the market are largely being ignored. As long as the economy is doing well, the market's doing well, it seems to just hold that support under the market.
Right, there's always a bid. That's the thing, there's always a bid. Every sell-off gets bought. You haven't seen a 7% sell-off in the S&P 500 in well over 2 years. The largest sell-off we've had was back in the presidential election, was over 3%. I think it was 3.4% overnight.
Best buying opportunity of our lifetime.
Right, and you're just seeing the markets just take off. So there is a bid below the market for any equity that is large cap, period. Doesn't matter what you are, who you are, where you are. There's somebody's going to be out there buying you because they know there's going to be an outperformance for you down the road that they can't pass up because they got to put their money to work. So, tidbit, look at the Dow Jones Industrial, right? 30 of the largest companies in the U.S. by market cap. Everyone knows that the Dow Jones is a price index weighted index as opposed to the S&P or the Nasdaq, which is market cap weighted. So you saw 7 milestones. It was almost 18,000 back in November 16. We just surpassed 25,000.
I think, was it the last 1,000-point move within 20 or 30 days? It was less than a month. Yeah.
Unbelievable, right? So who's adding to who you've got 30 companies in there. Some of them actually have a negative return for the year, right? GE, Exxon. So who do you think is really knocking out of the park? And anybody who's following, let's hear what you have to say because we know.
Right.
But can you name it? Who added the most number of points to the Dow Jones in the last 14
months? And we spoke about this a couple times over the summer.
Boeing.
And that's not even a tech name.
Nope.
Well, a little bit of tech in there.
It's a tech name, but it's
arguably
defense.
a defense name.
Boeing's trading at $3.
It just shows how broad this rally
It really is. They've added 1,000 points to the Dow since November of 2016. Unbelievable.
Well, my 401k appreciates that. And we appreciate you, as always, being here with me. Market Tight and traders, as always, thank you. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.